What is up, guys? Welcome back to the trading world. Today is December 16th, 2025. And first of all, thank you guys so much for 2,000 subscribers. That blows my mind. I'm so grateful for all of you. And so I wanted to start out by saying that, as well, if you're new to my channel, I cover the market every single day, covering all kinds of real trades you can take to make real money. I have a free Discord you can join to meet people who like trading, and yeah, I'm just here to help provide free content and education. Another thing I'm going to start doing, guys, at the beginning of each video, I want to do either some kind of valuable lesson, like just like teaching, like literally anything. So at the very least, when people watch my videos, they at least get something, right? At the very beginning, I'll teach like a concept or a lesson. So at least if you get nothing outside of the market recaps, which hopefully you do, but if you don't, you at least get the little thing at the beginning, or I'll go on like a little educational rant or something at the beginning of each video. But yeah, we're going to be reviewing price action today for December 16th, 2025. And looking at everything in detail. Today was amazing for low time frames, right? If you're looking for higher time frame expansion today, I'm sure you're probably quite annoyed. But the beauty of the fact that this higher time frame is consolidating is the lower time frame is going to be running highs and lows. And so we can still take trades on lower time frames. And there were plenty of good opportunities today to take trades on the lower time frames, and I'm going to show you guys all of them. Oh, first, today's lesson is going to be on another one of FA's concepts. I just made a video about pin bars, and I'm going to have a video coming out on this concept as well, but I haven't made it yet. I'm going to explain it in this video. It's called an outside bar, and I've been backtesting it for probably about a week now, and I've seen it to be super precise. And so I think it's very valuable, and I want to show it with you guys. If you haven't watched my video on pin bars, highly recommend doing that. That's a concept FA told me about, and FA's a multi-million-dollar trader, so he kind of knows what he's doing. So what is an outside bar? So it's super powerful. Basically, what will happen is you'll have a candle that basically takes the high and the low of the previous candle all at once. So, for instance, if this one is red, the next candle closes, taking out the low and taking out the high of the previous candle all at once. So like something like this, right? So see how both the high and low of the previous candle were taken? What you want to do when this happens is you want to typically target two projections or two R, and you want to enter right at this candle close. So like this. Bang. And then you just target 2R. And when this gets really powerful, this concept gets really powerful, is when you combine it with, like, let's say there's a giant accumulation range here. Like, let's say this is all low resistance liquidity. If you don't know what that is, watch my video on it. And then this was accumulation. This was manipulation. Maybe we have an S&T with a low. And then we get this. And let's say it's also off of a key level, like a new day opening gap or something. This is going to be crazy nice, guys. You will see this repeat in the market over and over again all the time. I'm going to show you like quite a few examples from today. But remember this signature, and this is a very powerful entry mechanism to get onside with the market. Once again, this is going to occur over and over again. So once again, it's a candle which takes the previous candle's high and low, and then you enter on the close. I'm going to show you guys quite a few examples. There's some pretty good ones. So I'm going to just pull up screenshots because to go through everything and mark it up is going to take too long. First things first, check out this one. This is exactly what I was talking about. Once again, lots of low time frame trades. So this was on the 15 second. But you can see here that ignore the candle's gold. That's just my indicator that helps me identify the digital root stuff. And I have a video coming on that later, but just ignore that for now. Just imagine it's green. But look at this, right? We have a accumulation. We have here. Let me move this over a bit. Okay, so we have a accumulation. We have a sweep of these bodies and also this low. We have an SMT with this low, and then an outside bar, right? Here's that prior candle, and you can see we take the high and the low of that previous candle, bang, enter right there. It's also at a digital root of 9. I'll have a video coming out on that later, but basically add up all the digits over and over and over again, and you're left with a single digit. When that digit is 9, it's going to help you get more accurate, higher probability entries. Just from my backtesting, I've seen that to be the case. Backtest it for yourself, obviously, but bang, right at 936, we get that outside bar, and then you can take this up to projections. And then we had the overnight gap above. This was a really nice draw on liquidity. So bang, bang, close. So the overnight gap is the gap between the close of at 16:59 of the previous day and then the open at 9:30 of today, which was right here. And then yeah, this is gonna want to be filled. Like it's almost a lot of time. It's like one of the first things that gets filled right in the morning is this overnight gap, and bang, we go right up to go fill it. Here's another example. Once again, this time we had a sweep of another great draw on liquidity, which was the market open wick. So here's the wick from market open. This is going to have a lot of liquidity here, right? We sweep it out. We get an aggressive reaction off of that market open wick. And then once again, another outside bar, guys. Another outside bar. We have a prior candle. We take the low of it and the high of it. As always with any concept, you got to pair it with context, right? The context of this is we have SMT. We sweep out the market open wick, which is basically like a data wick. So it's a super nice draw on liquidity. We get an outside bar. I mean, it's not rocket science. It's just understanding the situation and executing off of it. So outside bar, off the market open wick. We know that people got stopped out because that's essentially like a data low. Outside bar, enter, and we can take this up to projections, or in this case, to those low resistance highs. So that was nice. Then essentially after all that occurs, well, first of all, why did we go back down? Well, so the draw on liquidity went like this. We had the overnight gap, which you can see got filled first. See how perfectly we filled the overnight gap? Wait, let me drop down to a lower time frame. Yeah, so see how first things first, we go fill the overnight gap. So that's check mark number 1. We actually perfectly tap a new day opening gap up here. Check this out. So we perfectly interact with this new day opening gap. So that's this is light blue area. If you go scroll back far enough, there's a gap between the open and close of a new day. It's going to be a sensitive key level in the market. So we tap that. So we go first draw up to fill the overnight gap. Then we come down to the next draw on liquidity, which is market open wick, which is like a data wick. And then we go up to this data wick, which is an actual data wick. It's 8:30 news. So from one draw on liquidity to the next, systematically just going from one liquidity pool to the next liquidity pool to the next liquidity pool. And people think this is random. It's like systematically, perfectly going to fill this overnight gap perfectly. And then it's systematically going to the market open wick, and then it's systematically stopping the guys that entered at the data wick. Like, you can only make excuses for this so much before you realize, nah, it's just an algorithm. It's seeking to make as many people lose as possible. That is this. That is what the market is. It's a machine, right? So that's kind of why we went up and then down, then up. Then at this point, we form a sell model. So I'll show you guys that whole entire market maker sell model. There was a beautiful entry, Phoenix entry at the rejection block here. We had SMT with the 830 data wick. So there's that Phoenix entry. You can see there's that rejection block. It was for sure we might be looking at the 15-second chart here, but this is a 1-minute rejection block as well. We also tapped the rejection block at a digital root of 9, 10, 08. So 1 plus 0 plus 0 plus 8 is 9. So digital root of 9. Tap the Phoenix entry. We aggressively expand lower, break structure. We form a gap on the 1 minute between this low and this high. So there's your 2022 entry. We also backtest the new day opening gap. And then we continue all the way down to this low to complete the sell model. So I nicknamed this, when you enter off of a Phoenix and then enter on the 2020 off of the fair value gap, I nicknamed this, I just nicknamed it, I don't even know how to pronounce it. But that's my nickname for entering at the Phoenix entry and then entering at the fair value gap. And then taking it to the low. And yeah, like I said, another thing that's going to occur a lot, guys, is we will get off of these new day opening gaps and stuff, we will get these pin bars, we'll get these outside bars. Pay attention to them when we get these pin bars and outside bars off of new day opening gaps like this. It's going to be nice. And in the afternoon, real quick, I want to mark this out because I think this was cool. We had the afternoon first presented for value gap. We have a 15-second change of state. We have two different ones. Both of these get utilized. And then we go up 4 projections. I mean, look at how precisely the market interacts with these first presented for value gaps. I can mark this out right here, right? Let me go to the 1 minute. Look at this. Look how precisely this reacts off the first presented for value gap. If it was random, would it do that? Would it move off of this so perfectly and then perfectly react off of that 15-second change in state? Or not perfectly, but off the lower one it was perfect. Off the higher one it went to OTE. But would the market do this thing? If it was random, would it do that? No. It just would not do that kind of stuff. It's impossible for it to be random. And the more you watch my videos, the more you'll see that. Anyway, guys, I'm going to end the video here. Thank you guys so much for watching. Hopefully you found this helpful. If you did, feel free to leave a like, subscribe if you want, and I'll see you guys in the next one. Peace out.